that's the big question for investors, Michelle, is whether the Fed once again will follow the markets. Maybe not in the next meeting. They'll do 75, which is the expectation, but just in terms of cooling down the rate hikes here on signs that inflation is easing.
Yeah, I think that's exactly right. The market has priced in an awful lot of Fed tightening. We're looking for a funds rate over 3%. And I think, as you said, the expectations are most likely 75 basis points in July, maybe another 50 in September. But will that be essentially it? Even if they do a little bit more between now and year end, do we need to reprice even higher, or is there a risk the Fed could end up having to do more? And right now, as there's signs of inflation cooling, as there's signs of maybe some of the cooling in terms of the U.S. economy, it doesn't feel like that will need, the market needs to worry about the Fed doing even more. And I think that's what tomorrow's numbers will be really important. If the numbers suggest wage growth may have peaked, employment is strong but still somewhat cooler, then the market can get comfortable with the idea that enough is priced in for the Fed right now. And I think that would be good news.
Also, both Waller and Bullard today were very confident, almost cocky in talking about a soft landing, that they think they can pull it off, because everybody else is saying that's going to be very, very difficult, including the Fed chair himself, Paul. So are you a buyer? Do you believe in this rally that we've seen this week? Would you be putting money to work on the idea that it's been peak hawkishness and peak inflation already in the market?
No, we're not buyers of that idea, and we think it's going to be extremely difficult. You know, historically, the Fed has had a lot of trouble, and its batting average is well below 50% in terms of engineering soft landing. So, no, we would be fading any rallies here and focusing on the opportunities to be defensive in fixed income and buy quality and go up cap, up market in stocks.
So when you say defensive in stocks, do you mean consumer staples, real estate, not working today, but have worked so far this year? Are you sticking with those kind of groups?
Yeah, we upgraded staples, or we upgraded utilities. We're at market weight now. We'd be focused on energy at the other side of the barbell. We also like tech here. We'd be buyers here, but looking for quality. Our colleagues have good lists of individual companies. That's not my area. But we do like energy and tech. We'd also throw healthcare in there as a quality sector. Companies and sectors that have good cash flow, good cash to debt, and really good organic revenue growth prospects for the future. That's how we would position in equities and use this opportunity to fade rallies, get out of cyclicals.